We talked a bit earlier about the big changes in big tech's performance, but let's get a technical take on some of these names. Time to go off the charts with Chris Verone of Strategas, a Baird company. Chris, we were talking specifically about NVIDIA and Google and the change of fortunes over the past month. What do you think?
Big change of fortunes. I mean, you have Alphabet breaking out of a huge base. I mean, this is a stock I think can go a lot higher. And then you juxtapose that with NVIDIA. I don't think it's putting in a big top, but it's certainly fatigued. It's made no progress for the better part of the last, call it 30, 40 trading days. Watch the 20-day moving average on that. Was basically support all year. It's now resistance on top of it. I think 850 is a really big level. If you're under 850, you're talking about a deeper pullback, maybe 740, 750. There's a big gap on the chart back from earlier this year. And then you have names like Apple, which the damage is more serious. I mean, this is a stock that has topped, and it's been topping for 6, 7, 8 months. It's probably oversold. It could certainly bounce from here. But the relative deterioration in Apple is 2 or 3 quarters underway here. I think any bounce in the short term, let's call it maybe you can rally to 175, you want to be a seller. But I think what's notable, Mel, is that on the other side, you have these names that haven't participated starting to now get involved. PayPal is a great example here. Stock's been in a bear market for 3 years. It has finally started to turn up. So it's maybe a split tape. I think there's pockets of momentum and there's areas of fatigue. Watch out for the big top formations like Apple.
Those two names, so NVIDIA and Apple, you're talking about, we know what the market cap is. What does that mean, if you're right, which you probably are, what does that mean for the broader market?
I think today was a great microcosm of just that, where you have Apple heavy, new low, you have NVIDIA heavy, yet breadth on the NYSE was about 2.5 to 1, right? So 2.5 advancing stocks, 1 declining stock. This is a rotational market. Where'd the leadership come from today? And the real estate names acted great despite what rates did. The regional banks continue to act great. Look at PNC breaking out here. Goldman trades pretty well. Morgan Stanley trades well as well. So this is a rotational market, I think, as the big weights maybe run in place or consolidate.
PayPal is the P in Bicep, so Tim is quite happy with that call.
Look, I mean, Chris is coming at it from, he probably refers to these are maybe fundamentals, but no, I love the call on PayPal, and it has been a stock. If you've owned it for a couple of years, this has been a terrible run, terrible underperformance, but I think if it's a fresh dollar allocating here, PayPal, first of all, new management team, Alex Chris, I think has expressed urgency around innovation and some of the checkout stuff, making this platform look, I think, as kind of all in for or a one-stop shop for merchants. I think the cost savings, that whole year of efficiency dynamic is something else for the stock that's very important. The valuation is certainly not demanding. In fact, it's quite cheap, but that's been a problem for 2 years. So I like the story on fundamentals. I like the fact that the charts have been building this base, and it doesn't turn overnight. It takes as long as it takes to get there.
And I think what's exciting is the news hasn't been particularly good there, yet the stock has stopped making new lows. And that's the first thing we look for. Names resilience to bad news. And watch the 68 level. Above 68, this could really get explosive.
Yep. Chris, you just mentioned regional banks acting well. They're down 10% from their highs. Yeah. They're kind of stuck in the mud here a little bit. We've been spending a lot of time talking about rates. We know it kind of foiled the bank trade last year. Do you like them constructurally? Just looking at the structurally from the KRE in particular.
I think, if anything, they're diagnostic here. There's value in evaluating what the consensus perceives to be the weakest part of the market. And I think the consensus still believes office real estate and regional banks are where the next shoe will drop again. Well, those were last year's risks. And at worst, these things are market performers here. They're not really breaking down in price terms. So from a diagnostic perspective, I think as long as they're okay, the market's probably okay as well.
Chris, before you go, we want to ask you about your new ETF, which was launched last week, based on technicals.
Exciting stuff. Technical ETF. SAMM is the ticker, stands for macro momentum. And what we really seek to do is what we do in our research. We seek out momentum and strong technicals and relative strength wherever and whenever it's found. A lot of copper stocks in there right now, just given the strength that we've seen in the metals. A lot of industrials, financials play a big role right now as well. So momentum oriented, and we're super excited about it. Thanks, Mo.